I'm here today with Gennaro Faiola of Genworth Financial.
Hi, Pam.
Hi. Now, I really appreciate that you're helping me answer some of my questions about
Sure.
reverse mortgages.
Mm-hmm.
So I have a client, actually a couple that are over 62.
Yes.
So I believe they'd be qualified to do a reverse mortgage. They're interested in purchasing a home. Now, can you purchase a home with a reverse mortgage, or do you have to already own your home?
Great question. And the great thing about a reverse mortgage is that it can be used to purchase a home, as well as for homeowners who already own the home and simply want to use the reverse mortgage to get some additional equity or additional dollars monthly income. But a reverse mortgage for purchase, as it's called, is a great tool for homeowners who want to buy a home, who don't necessarily want to put all their money down, so therefore they own the home, but then they're sort of house rich and cash poor. Mm-hmm. Or maybe they have a challenge or don't wish to have more of a conventional mortgage where they have to qualify based on their income and their assets, or possibly have a monthly mortgage payment that's more than their budget allows.
So if my clients are interested in purchasing a home using reverse mortgage, mm-hmm. they don't have to use all their equity or all their money that they have in the bank, for one.
Correct.
And another one is they won't have to pay a monthly payment.
Yes.
So they're really going to save with that too. Now, is there a limit on how much they can get a reverse mortgage loan for?
Great question. Typically, the reverse mortgage amount calculated is based on the age of the borrower and the value of the home and the current interest rate. So in simple terms, the younger borrower is going to get less than the older borrower. And it's typically somewhere in the neighborhood of around 50 to 60% loan to value. So for example, if the home came in at $400,000 and the borrower was, say, 68 years old, rough estimate would be they'd probably have to bring in less than $200,000 to close the transaction.
Okay, so they'll bring in $200,000 for this $400,000 home.
Right.
And for the rest of their life, they'll have no payments.
That's correct.
That's
correct.
kind of a cool deal.
That's a very cool deal, you bet. Absolutely.
And how do they determine the interest rate on that money?
Oh, great question. Well, the interest rate, the nice thing about reverse mortgages is they are determined by FHA and HUD. And so typically the reverse mortgage rates are somewhere between 4.5% to around 5.5%. And generally, like most traditional loans, the lower the rate, generally there's a greater benefit, but also a little bit more cost. Whereas if you have a higher rate, typically you have somewhat of a lower benefit, but a no upfront cost to the transaction. So it really depends on the borrower's needs. Some borrowers want a really low rate, others want a no-cost loan. And so the nice thing is there's some flexibility there. But the best part is that it is regulated through FHA and HUD, so that one lender doesn't necessarily have the ability to charge a much higher rate than any other lender. So it really comes down to who you want to work with, their experience, and their ability to do the transaction for you.
Okay, so to wrap that up, someone that's over the age of 62 can purchase a home with some equity down, because you only can do a certain percentage.
Correct.
To pick a lender is pretty much relationship, because
That's
you're
correct.
going to get the same price no matter where you shop.
Just about,
pretty
yes.
much. And there's going to be no payments.
Correct.
And the house can't be taken away from you.
That's right.
And is there anything else you can think of?
Certainly. If you have any other questions, give Pam a call or myself a call. We're happy